weekend. And we're going to continue our topic this week on definitely on the Bank of Canada. As you probably heard, they raised their interest rates by 50 basis points. What that means, they've obviously had an effect on the market, and I wanted to shed a little bit more light with what they may have planned for the rest of the year. We'll talk a little bit about what we're seeing in terms of some of the data, and I definitely want to show you what we're seeing in terms of current active listings, where they're expected, and what they're kind of seeing today in the marketplace, and obviously some of the termination data or the sales data. And this is really going to paint a picture for you of how the market has slowed down. As I've been sharing with you, definitely since March, this topic has been definitely on the first of our minds and hot in the marketplace. So we're going to continue that discussion, so definitely stick around for the full video. Share any of your thoughts along the video. I definitely love to hear what you think. Where do you think the Bank of Canada is heading? What do you think about buyers, sellers, and obviously what we're seeing in the marketplace in terms of price and actual inventory sales slowdown? Before we kick it off, just a bit of a disclaimer. I am a wealth management advisor. A bit of this is my perspective, my expertise. And if you're looking for advice, always rely on or reach out to your trusted advisor for perspective, their understanding, their expertise. Or if you have a question for me, you can obviously reach out to me here via YouTube, or you can reach out to me, through social media, Twitter and Instagram. My links will be in the description, along with links to all these different articles and Twitter threads will be in the description. So why don't we kick it off? The first article here is, obviously the biggest news of the week. This Wednesday, yesterday, April 13th, Bank of Canada hiked interest rate by 50 basis points. So they took their overnight lending rate to 1%. Canada Central Bank also said they're going to start tightening in terms of quantitative tightening. That just means they're going to start selling off their government bonds they've been purchasing for the last 2 years. The Bank of Canada also sharply increased inflation expectations. This is obviously with Russia, invasion of Ukraine. We've seen spikes in oil, natural gas, other commodities are adding to inflation around the world. And this is in addition to obviously inflation that was already being felt even before the Russian and Ukraine conflict. Supply chain disruptions resulting from the war are, ongoing supply constraints and weighing activities. These factors are the primary drivers of substantial upward revision to the bank's outlook for inflation in Canada. The Bank of Canada expects inflation to average almost 6% in the first half of 2022 and above the control range throughout the year. The control range is about 2 to 3%. It expects inflation to come down to about 2.5% in the second half of 2023 and return to its 2% normal in 2024. So we're talking about 2 years out when the Bank of Canada actually expects things to normalize. With the economy moving into excess demand and inflation persisting well above target, the Governing Council judges that interest rates will need to rise further. So they're thinking about raising a number of other times through the rest of 2022. We'll wait to see what happens. Inflation is definitely one of their big priorities as the Bank of Canada. So inflation is hot. It's definitely, we're seeing in the grocery stores, you're seeing at the gas station and, the general, and all of us are talking about it. So obviously this is a big part of the action. With inflation above target, with the economy moving in excess demand, there's a need to normalize monetary policy. Monetary policy has been abrupted ever since the pandemic, and that's reflected in the decision today to raise it by 15 basis points, said McElham during a news conference. The Bank of Canada brought out the big guns in its fight against inflation, but for those fearing the worst, it's noteworthy that it sees room for the economy to put in 2 healthy years of growth as it does, and that's for CIBC Chief Economist Avery Sheffield. With variable mortgage holders, they can expect higher rates in the coming days as lenders raise their prime rates, and they have already. The banks followed right after. It says for an average price Canadian home of $860,000, monthly mortgage payments based on a typical or best 5-year variable rate today of 2% would be around $3,200. The same mortgage with a 50 basis point increase means the estimated payment rises to $3,383, so almost $3,400, an increase of $186 per month. So Canadians are definitely going to have less disposable income. Individuals looking to get a variable mortgage today are going to be paying more in terms of interest. And if you're looking to get a fix is almost about to reach 4%. So definitely it's becoming harder and harder to get cheaper rates. And that's the whole purpose of obviously the Bank of Canada tightening. And this is obviously going to have a large part or large play in the Canadian real estate market. So next article here from the Canadian press, Canadians with mortgages brace for big Bank of Canada hike rate. Just going to go through a bit of the information, some of the data. So with variable rate mortgages pegged to the Bank of Canada decision, interest rate hikes will begin to bite soon. This is BMO Capital's senior economist Robert Kaviak. The big banks, Canada's main mortgage lenders, already moved their prime rate from 2.45 to 2.27. So with the 50 basis point increase, it's going to 3.2. And what we're seeing as for Canadians who have spent the pandemic saving the money to pay for a down payment on a home, that money may not stretch, obviously, in a rising environment. Although taming inflation is one of Bank of Canada's primary goals, higher interest rates could have a cooling effect on Canada's housing market. Also commented the senior economist, and we've seen this, and I've talked about it in last videos. Houses are taking longer to sell. There's less home sales, and prices have definitely peaked from February, as I've been showing in the data in the past. And obviously, a little bit about investors here in this next article. They're always going to have a play in the market, but this action here of raising interest rates will definitely make a difference on them thinking twice or not buying multiple properties. But just a little bit about the data, as you may be interested to know, that new data from Statistics Canada shows multiple property owners held between 29 to 41% of housing stock in Ontario, British Columbia, Nova Scotia, and New Brunswick in 2019 and 2020. The data from the Canadian Housing Statistics Program, which includes both residential and recreational holdings, reveals multiple property ownership accounted for 41% of Nova Scotia's housing stock, 39% in New Brunswick, 31% in Ontario, and 29% in British Columbia. The data comes after the Bank of Canada found in February 2021 that investors made up 20% of the country's home purchases. Annie Hermary believes that few buyers have been deterred from owning multiple properties by the pandemic and soaring real estate prices. If anything, the health crisis has made buyers feel that real estate is even more, sound as an investment, obviously with the price increases. In the last couple of years, we've seen millennials deciding that real estate is one of the safest investments, and they are taking money not only to buy their home, but for other investing sources to buy a second home. We're hearing a lot of that. One person wants to buy the investment property first, or vice versa, buy their principal residence and then go buy an investment property. Everyone's, it's obviously top of mind. The demographic Rostec notice shifting toward multi-property ownership is in line with Statistics Canada data, which shows that the top 10% of owners in those provinces earn more than the 50% of the bottom. With the top 10% of owners in Ontario and British Columbia earning incomes of $125,000 or greater. The national average home price has climbed more than 20% since last year and hit a record of $816,000 in February. A few people have decided to invest obviously in other ways like the stock market, business, and other holdings, but real estate is going to continue to be a strong asset that investors want to own. So do not think that interest rates rising is going to take investors out of the market. They will always have a play, just a little bit less hopefully in the situation with the higher interest rates. The next here, I want to talk about the inventory in the GTA. This is a thread or a tweet by Alex here. I believe he's a realtor here in the GTA. So weekly GTA active inventory update. The resale inventory is obviously increasing. At this pace, historical average for active resale inventory will be achieved within 2 months. As I've shared in the past, usually typical resale inventory is about 4 months. We've been at 1 month for the last quarter, or I want to say at least like 3 to 5 months, it seems like. And what we can see here is ever since January 2022, we've seen a gradual uptick. So right now, about start of April 1st, we had about 12,000 properties listed, and this number continues to increase. And this number, what we're expecting is this is to continue up as people come out, pandemic's almost behind us, and people want to sell their property. So we're going to see definitely more of this as time comes. And the last article, or the last piece of information I want to share with you, is from Scott Ingram. He's definitely a realtor in the GTA and definitely brings us some great data. And let's continue. This is from, I believe, April 11th. And we cool some more. Terminations as a percentage of sales are at the highest level for early April for any year other than early COVID period in 2020. The theory is you don't have to terminate and relist or wait till the fall if your place sells with ease, right? So we're seeing more terminations in the market. People are listing at a price, they're not getting what they want, and then they're relisting it. They're terminating and relisting at, oh, I actually wanted this price. With freeholds, houses in the 416 have continued their steady climb since mid-February. As seen in a separate tweet today, sales are slowing down, and that's thrown some sellers for a loop because they are normally increasing through May. After, spring's a very hot season and we're usually seeing a trend up, but this time is reversed. More inventory, buyers have gone on the sidetrack or they're waiting. Bank of Canada decision obviously has an impact as well. So that's definitely made a difference here. And we can see here this number trending up in terms of weekly terminations as a percentage of sold. So really, this was the data I want to bring you guys today. I hope you found the video helpful. The three things I definitely want you to take away is that Bank of Canada has said they will continue to raise interest rates, and they definitely took a large stance this past Wednesday. We're definitely going to see, Canadians belt tighten a little bit metaphorically, because they're gonna have to service that debt at a higher level, so they're going to be paying more of their disposable income to service this debt. So that's going to make a difference in the housing market in terms of slowing down sales, slowing down home activity or home price appreciation. Investors are still going to be in the marketplace. Don't discount that, but there's going to be a change in their manner as well, because they're going to adjust these interest rates. They may think twice about buying that property based on the level of their debt service as well, right? And really continuing along, the market has changed. There's definitely more houses to buy. Buyers a bit more patient, and definitely we're not seeing that price appreciation month over month of hundreds of thousands of dollars. So I hope you found this video helpful. Follow me along on Twitter and Instagram. Please leave a comment, a like, a subscribe will be much appreciated. Well, and I appreciate you taking the time to watch this video. So have a great long weekend and Easter weekend. I hope you stay safe. I hope you stay well and spend the time with your loved ones. Thank you so much for your time.